Good morning, traders. It is 10:50 a.m. in California on a Sunday. Just recording this video as requested. We'll be going over some of last week's trades, how you could have basically played last week, and then a bunch of questions you guys had. Basically, the main question I got was how I trade, how I chart, how I got my levels. So that's going to be the main concept of today. Video might stretch a little bit long, but it should be an informative video overall. So let's get started. Here we have Monday. So you have to ignore everything else that happened on here. Right? You have your Monday. Starts off rejecting this in the London session. We get a huge pop. So we have to draw this level here, 601. This is just a pre-market level, right? Rejects 3 times and then drops. It's okay if you didn't catch this short right here. You could have tried a long, for example, at 560, and you would have almost made money all the way back to 580, and that could have been your trade, right? 30 points, and you call it a day. It doesn't matter what else happens. Doesn't matter what else happens. Okay, that's a bit late. Sorry. Yeah, there you go. It doesn't, like, you could have just caught a long here at this level, somewhere around 550. I believe we did actually, and you sell it for 20-30 points somewhere around the 580 mark, and you'd get out, and that's your 30 points for the day, and you call it a day. There's no reason to keep trading, once you make your money, right? You got to take your paycheck and you got to leave. It drops all the way down here. It forms multiple bottoms here. You don't want to try catching this. You don't want to try catching this, but on that one you could try. So we could try plotting a level right here, right? So something like that. And third time it tests, you buy this right here with a stop right under here. So you're risking what, 10 points for a chance all the way to go back to 70. So 50 points. So your risk is 5-1 here, which is it's amazing. And it has a decent probability just because it went there 4 other times and it's held every single other time. So it's tested this wick right here, and it's tested again, then it dropped, and then it tested lower, and it held every single time. You could have also tried for a short, right? So you have this level here in the pre-market, and it held here, and then it came here back and rejected. So you plot this level, 487. Every single time it goes to 487, you short, and you get out for like 20 points. So that's a pretty easy short as well. You could try every single time. I mean, not every single time. Every single time, like, it looks decent. And you have a stop, I don't know, let's say 95. So you're risking 8 points, potentially make 15 to 30. So it's double with a pretty high probability. So we kind of have this zone right here. We know it popped, but it didn't hold. So that could have been a short pre-market. But let's say you don't trade pre-market. Holds the same area. You could think of it as going short right here, but that's just in hindsight. When looking at this in pre-market without seeing all of this right here, you could have tried this for a long and try to scalp 10-20 points, right? And your stop would probably be somewhere under this low right here, probably somewhere around 11. And you see that 11 rejected here like a couple times, so that would have been a great short entry. But let's also say you missed that, right? And now we're opening into Tuesday. Keep in mind, we don't have any of this knowledge. We only have this session. We open at a very key level here near the 200s, and I'll show you guys why in a second. We open near 200s, almost no follow through, and we have this level at 296. I think it was from a little bit earlier ago, but we have this level at 296. You can kind of see how it starts to reject in the 280s a little bit in the pre-market and in the middle of the day. It goes up. Oh, I actually remember how we played this day. And it starts to bottom here. It starts to look pretty bullish. Okay. So all we need to do is, we know we have a two-way auction here. We just plot a level, so because it goes up and down. You could short this for a lower, or you could long this for higher. We actually long this. I don't know if you guys remember. We bought 270s. And we took up much higher. We mentioned 315. It went to exactly 315. It came back down, and we bought it again. And then we wanted like 340 as our target or something, and it ended up going to a little bit higher. So my risk here is very clear, right? I'm buying in the 70s. I saw lots of buyers on the 70s, and my stop is probably somewhere a little bit before like 262. So I'm risking 8 points for potentially 96 or higher, which is 25 points or more. So I'm risking nothing for the potential to make a lot. And the more trades you take of these and you win, you can afford to lose 5 or 6 trades and be break even. This is the good thing about playing with high probability trades that are multiple R. Just because if you win one, for example, I bought 272, I think, and my stop losses would be somewhere around 260, 265, let's say. So I'm risking about 8 points to make 25. I ended up making like 60 on that trade, and I was only risking, let's say, 10 points. I could lose 6 trades in a row, risking 10 points, and I'll still be break even. I won't even be at a loss. Winning one, losing 6. You get me? So that's why these trades are really beneficial. Um, Pre-market bounces at the same level we had at the 290s rejection earlier on Tuesday. The 270s bounce, right? We have another bounce here at that level at 250s, and it goes back a little bit lower. So we don't touch it while it's here because we don't know it could go. It can end up going lower. It could end up reverse, but it doesn't matter. Because it doesn't. It really doesn't matter what the market does at all times as long as it's not within our edge. You only want to trade when you have an advantage. You only want to trade when you know there's a high probability of it doing something. Otherwise, it's really not worth it. You just gotta be gambling. So this is the 10 minute. So the reason why I draw this box, this is the box where it starts to reject upward of this pre-market high. So this is going into Wednesday. Okay. So I'm gonna remove this real quick just for chart simplicity. Okay. So we get this quick roll. So you could have played the breakout of 320. You could have played the breakout of 340. But let's say you missed the long here. Okay, let's say you missed this opening dip and this long. You could have played this. You could have played the opening break of 285 right here. This is the high of the first 10 minutes. Or you could have played the low, the break of the low, or the first, I guess, candle. I don't know. Okay. Now we have Wednesday going into this, and we know this is what happened previously in the week. So it pops all the way up, a huge run, right? So if you look at from the bottom 200 to 450, a 250 point run over in one day, and it comes back to our tested Monday area where we rejected pretty hard. Comes back, dances around, and comes right back down. Let's say you also didn't catch this short, and you didn't touch it. This is where you could have made your money. It starts to now we have this level at 25. Remember, this is that level that we made earlier on Monday, right? Now we have that same level rejecting a ton of times. What do you do there? All you gotta do is you take a short 25 with probably a stop somewhere at 40 or something, right? So you're risking 15 points to make 20. Okay, so it's kind of a close trade. But you know the probability is in your favor, and you're scalping. You're not looking for a huge drop down. You could have also went short with a stop a little bit above the highs, so at 450. You're risking 25 points to potentially make 370. You know, you're risking to make 50, 60 points. But I don't like using the word potentially just because you could potentially make money anywhere. But when I use the word potentially, I mean probably. Right, there's a high probability of it happening, or there's a reason, there's a setup for it to happen. It's not just you could buy here and you could probably make money at 520. No, I'm not. That's not what I mean by probably. So you could have shorted right here with a stop a little bit above the highs, for it to revisit these lows and this level right here, and then you could have also bought long. So we have this box right here, right? This is the pre-market. This is the EU high. And we had this box from yesterday. It goes back, it tests 3 times. You could buy this with a stop potentially at 296. Right? So if it breaks under 296, you're out. And you catch it for a really nice long. Obviously, you're not looking to hold for the full move, for a full reversal. So you're just looking for a pop. So you buy at 320. I don't know, you sell at 360, you sell at 340. You get 20 points on like 20 point risk. But the probability is in your favor. This is the crazy... This is a crazy pop in after hours. I don't know what happened. Some short blew up. We go into Thursday, and we have all these levels. We have all these levels right going to Thursday. So if you look back on the week, Every single level has a big reason. It's not like we're just drawing random levels. We get a pop, we get a retest back at 487. First of all, we get the rejection at 560. Well, that 560 level is really important back on Monday, if you guys remember. But let's say, you know what? Let's say you didn't catch it. The first thing you could have caught was the 480, whatever. I can't speak right now. The 487 long. We have this 480s level from Monday, Tuesday. That's where it even went on the pop and it didn't go any higher. So you kind of have to draw this level. Even though we had it drawn, like, you have to pay attention to it. It goes there. You kind of see how selling is slowing down. This is a very important concept I always use. You don't want a long when it looks like this. You don't want a long when it goes like this. You want to start looking for longs when it's trying to reverse. When momentum is slowing down on one side, that's called exhaustion. Right, the sellers are getting exhausted selling, basically. So right here we see buyers stepped in and they were able to take it up. Buyers stepped in, they were able to take it up. We see some buyers are present here, right? It didn't go lower. Buyers are present. The selling is not as active anymore. It's not like this. It's not like that. It's not like this. It's not breaking through key levels. It's not really. It's very weak, right? We're not going higher, but the thing is, we're not going lower. Buyers are kind of loading up this area, and we know this is a key level, so this is a good area to get long. And all you gotta do is literally go long. 487 with like a 20-point stop, 10-point stop. Let's say that. Your stop is somewhere around here, right? And you catch it all the way back to highs. You catch it just back to 514, whatever it is. You're in tons of profits. It doesn't really matter. This is where we get juicy. You get this 560 short again. This is the same level we rejected pre-market, like the first 5 minutes. It's a big level we had earlier, and it's rejecting multiple times. You could go short with a stop at high a day. You could go stop. You could take it with a 20-point stop, just because you know your potential is a lot. Like you're risking, let's say, 15 points for the potential to make almost close to 100, close to 80 points, and then under that it's just a waterfall, and that's exactly what happens. So we have no edge playing this. Like this, the selling here is a little bit strong. I believe I missed this move. I was sleeping. But you could have tried a long at 296, for example, and you would have made money. I probably could have taken, I'm just being honest with you guys. I didn't trade the session, so I don't know what I would have done. But looking back at this, I probably would have tried longing 250, somewhere around here, where you see, just because selling tried to step in twice, and it's a key level we had earlier. So I probably would have bought 250 and I would have sold really quickly. Probably would have sold for 15 points or something on 15-point risk as well. And I would have still made money. I would have been wrong on the overall move, but I would have still made money. I would have still profited on a quick little pop. Okay, right? And it drops all the way down to 18,060. Right? So this is a key level, actually. Because if you look on the 1 hour chart, we've been stuck in this range for like 2 weeks now, and this is where we keep going. So lots of people are like, "Oh, the market's gonna crash, the market's gonna tank, it's so over," but they really fail to recognize that we dropped very fast to a very key area. When we drop really fast to a key area, it usually bounces back up, at least for a relief bounce, and it could go back lower. That doesn't matter. But when we drop really fast to a key level, I don't have the exact percentage, but from what I observe, really fast selling to a key level usually we get some sort of bounce. So we have this 18,060 to 18,000 level, which is really important. And so this is on a bigger time frame, so you could have a bigger zone. Instead of a 10-point zone, you could have like a 40, 50-point zone. So anyways, it drops right to there. We're up like 100 points in the pre-market, and it drops again. So I'm thinking, okay, we might retest these lows. We might go a little bit lower. Just time to be patient. So we have this 160 level right here. And if you also remember, we have this 160 levels right here. I wouldn't have done anything. I didn't actually touch this at all. But what we should have done actually is play the pre-market high of 170 with a stop somewhere around 150. So you're risking 20 points for the potential for it to go back, somewhere to the 250s. And it did go back to the 250s. But let's say you didn't catch this move, right? So you plot a level at 230. You could have tried going short here for a couple times, looking for either all the way to move lower. So your idea would be it popped out the open. It's rejecting this 230 level. Time to go lower. Or you could have just played the 170 break, and not really do anything up until here. Now, what you could have played here is very important. And now we have this 250s level, which is an important level we had earlier. Monday, Tuesday, tried to buy here on Thursday. So we know 250s is a pretty important level we have. First thing is it rejects comebacks. You could try to buy this 250s, but let's say you missed it. And let's say you missed this 370 short. First of all, that was a great short at 400. We know here we have this level. If you look very closely on Wednesday, the bottom of this range here was exactly at 400. Also 400 is kind of very close to this area, to this bottom, and to this pre-market. This like pre-market pop, I guess. So we know 400 to 420 is a pretty important area. So it pops here. You could attempt short, or you don't have to go short. But we know 250s is a great area. So coming back from 400 to 250 is a 150 point drop. You could try longing this area here. So you could have literally done nothing the whole day. Absolutely nothing. And you come in the last 2 hours, you see that it's trying to wick off the 250s, and this is your signal to buy. It's held here. It's held in 3 other days past in the week. You buy here with like a risk somewhere under this wick. So under 230, you're risking 18 points or something. 20 points for the chance for it to go back to 350. Yeah, 100 points for a 20 point risk. That's still a 5-1, which is still great, and it's got potential to do so. So it pops again. Let's say you miss this first pop and you miss this one. This is your second chance. Okay. You don't have to take every single trade. Just know there's plenty in the day. What I mean by plenty is at least there's usually always at least 3 really good opportunities. 3 to 4 really good opportunities throughout the day. That are really 5-1, 6-1 risk with a really high probability. You just have to wait for them. And that's how I would have played this week. And that I took most of these trades I just talked about. If you look back in the Discord, lots of these trades were like taken, alerted, shared in real time, because you just have to assess. Right? It goes to that level. You know that level is a good level. You buy with a tight stop for the potential to go back 40-50 points. It's not that extremely hard. You just have to get used to not charting really small levels. You can't chart this, you can't chart that, you can't put a level here. You don't want to put a level here. You want to put the important levels up so you're not so you don't think that there's an opportunity when there isn't. Right? You want to always have a clean chart that highlights the key areas, so you're not taking a trade that's not there. Okay, and if we look back on the 1 hour chart, or I could also go to the 4 hour, every single level we have on this chart is there. This looks very cloggy. I don't like it, but so we look at the 600. You can see here how it rejected multiple times. You look at the 560. This is before this week as well. Right? So this is way before last week. This is starting from here is this week. So anything before that is prior data. So you look at the 600, it's rejected. You look at the 560, it's a key level right here. Look here, 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 here. Right. So we know this is an important level. 515, here, here, pretty close to here. Here, here. So we know 515 is a key area going into the week. We could have also had a level right here at 440 something. We actually did 446. Yeah. So you see how 446, looking at the bigger time frame chart, how it was a great level, a great pivot. So we could actually put a level at somewhere around 447 here, and we know that level held. So you can kind of see how you could spot them. And then there's nothing really under that. I mean, you could have in the 400s another one right here. the 400, and I know the 400 was a key level. So this pop right here, this bounce right here, this bounce right here. We go back all the way. Next level is at 350. So this right here, these wicks, all these wicks right here. I don't know if you guys could see what 350, 350. So we know this is a pretty important pivot. And looking at intraday data as well, looking at intraday price action, we know 350 is a key area. If you look back at 350, it's kind of close to here. It's not as important as other levels, but it's good to have on. You look at 294, for example, here, somewhere here, all these wicks right here, and then 250, same thing, right? And let's look back at prior data. So let's not look at this week. Let's look at this week. Bounce right here, reject right here, and then it goes through, obviously. So we know this is another key level to have, and then we have on the much bigger time frame, right, the low 18,000s. So anywhere in this vicinity, if you look back on the 4 hour, you can see how the 18,000 is a very big area to hold. And when you go there that fast, it was a great area to long. But yeah, this is basically how I would have charted this week. I did, not how I would have. I literally did in real time. But yeah, I'm gonna answer some questions. Criteria do you look for in order to take a trade, or when you're looking at the chart, price action, what do you see that makes you want to enter a trade, or that looks suitable to enter? Yeah, I mean, I just look for retests, and I look for low risk opportunities. So basically what I just explained. Let's go to a lower time frame so I could show you some trades. The criteria. It needs to be at a key level. I don't take trades at random places. Like I won't take a trade somewhere here. I won't take a trade somewhere here. I won't take a trade somewhere at this drop. Even if I think it's gonna go down, even if I know it's gonna go down, I'm still not shorting. It's not at a key level. The reason is I want all my trade data to not be noise. When I analyze my trade data later at the end of the week, at the end of the day, I want it to be meaningful. If I take trades at random places, all my trading data is just noise. I could be right, but it's just noise. It's not coming from a strategy. You want to trade like an algorithm. You want to trade very consistently. So the criteria is it has to be at a key level. I have to see some exhaustion or absorption. I see that through delta, and I just see that you could just see that through wicks. So wicks are here. You can kind of tell that there's buying or exhaustion of selling, right? It needs to be. I just need to tell that it looks like good. Also, I forgot what I was gonna say. Oh my god. Yeah, I just basically need to say if there's exhaustion or absorption. Only at key levels. I only trade at key levels. So you just plot the levels every day before market open. You wait. After some point, you'll have a bias. So for example, after this drop right here, I'll be looking to long. I won't be looking for more shorts. And it testing that level 3 times, I'll be looking to long. So I trade reversals. So this is what I look for. I wouldn't be looking be looking to short this. Right? I'd be looking to long this instead. This is my style. Both worked, but this is just my style. I look for a trade in the opposite direction. I don't look for continuation most of the time. How do you properly risk manage? I make money consistently and lose it all in 1 to 2 trades. Happens every time. What should I do? Have a stop loss. This is the biggest thing in trading. You should never enter a trade without a stop loss. Every single trade you take, you should know, I will take profit somewhere around this area. I'll leave a runner, the unlimited to infinity, and I will stop out. I will be wrong under this level. And you take your loss and you leave the market. To be a good trader, this is a very popular quote. You have to be a good loser. You have to know when to cut your trade. Because if you know you win over time, you can't, like for example, if I wanted to long this, I made money, wanted to long here, boom, I can't trade anymore. I'm fully out. And I missed all these other good opportunities to make money. You can't let one trade take you out. You can't let one trade wipe out. You have to enter with a stop loss, and what you should do is put it the second you get in a trade. So you're not thinking about it mentally. The second you get in a trade, you know you want to stop out 10, 20 points lower, you put that stop loss and you leave it. So if you stop out, you move on to the next trade, right? You're gonna thank yourself in the long run. You can't lose one. It's just honestly, it's a mistake everyone does when they're learning, but it's a pathetic mistake. I can't even believe. I used to go in the same trap as well many years ago. You have to put a stop the second you enter a trade. There's no such thing as hope, it'll go up, it looks good. No, when you're wrong, you're wrong. You gotta cut. You can re-enter back, but when you gotta enter that. When you re-enter, you gotta enter with a stop again. So if you're wrong again, you're not getting burned. You have to live to trade tomorrow. That's the biggest key. You have to trade until you could. Can you show us the potential of 5 to 10 points per day? I feel like I can do it, but I keep trading and end up losing. I mean, like I was explaining earlier, there's only 3 to 4 really good opportunities per day. There isn't unlimited opportunities. The market is pretty efficient at pricing itself. So there isn't that many opportunities to trade every single second. If you look at the 1 minute, for example, you could have taken this trade right here for a long, and that's 10 points. Okay, you could have taken it for a short. That's 10 points. You could have taken it for a long right here. We have this like through 180 level, whatever. You take it for a long, 10 points, 20 points, 30 points, 40 points, whatever, and you book it. You gotta leave. The thing is, you gotta leave when you're up. You can't. For example, you could have taken the short right here at 380. You see this 1 minute rejection, quick drop, pops back up here to 380. You take a short, 370 is literally right here. That's all you gotta be right about. You don't have to be right about so much to make money in the market. You just gotta be patient. Like if you lost 20 points here, you'd need to take this for a 10 point, and then you need to short this for another 10 point just to be break even. And if you want to make 20 points, you gotta take 2 more trades. Like the thing is, you gotta find the trades, and no, I'm sorry, not find them. They have to be there for you to take them. But like you have to find the opportunity. It's just a hassle when taking random trades, and you take random losses. If you could, like, I believe everyone can make. Maybe I'm overestimating you guys, but I believe everyone with proper planning could make 10 points easily per day. And you just book it. For example, if you do 10 points a day on 10 contracts, that's $2,000 a day. That's 10 grand a week. That's 40 grand a month. I'm sure that's more than what you're making now. So, you just have to be extremely patient. It can get boring, but remember, this isn't a hobby. We're not here to click buttons. We're not here to click buy and sell. We're here to make money. That's all we're here to do. You mentioned you have an algo on Twitter. What is it, and do we have access? So me and another friend, we developed an algorithm. We tailored it to my trading style because I've been really consistent over the past couple of years. We kind of trained it to take trades similar to mine. It's not an algo that makes levels. It's not an algo that, I don't know. It's not a random algo. It's an algo that basically tries to imitate my trades, with, like, for example, I think a long somewhere here or something, or I shorted somewhere here. It tries to imitate my trades. It's trained on my trades and alerts for the past couple years. And do you guys have access? You guys do not have access. You guys might have access soon, probably this week, but no promises. But I use it for Confluence. I don't use it exclusively to trade. I just use it. I'm like, oh, according to my data, I would have taken a trade here in the past. Right, so it's something to keep in mind. And it's been right a lot of the time. So this is it's not just trained on my data. It's obviously an algo that we developed, but that's a part of it. How long did it take you to become profitable? I don't want to say I have a success story, but I was profitable probably in the first 8 months or something. I was profitable a little bit before. I lost money, I made money, but I started making real money like 6-7 months in. I started making lots of money on options. The market was really hot at the time in 2021, but it took me. It didn't take me that long to learn stocks at all. I got better as time went on, obviously, but I was profitable pretty soon in. How to deal with overtrading? I keep seeing potential to make money and end up going negative. Like I said, you have to leave when you're up. You can't stay. You really can't stay. Um, yeah, I'll actually show the questions. There you go. How do I deal with overtrading? Yeah, you just can't stay in the market. You just have to leave. Um, when you make your money, and you don't like the market conditions anymore, you gotta book it. How much have you made this week, bro? That's I mean, I made a good amount, but I don't want to say it's none of your business, but it's really none of your business. Like I probably made a couple hundred points, if you want to think about it like that. Maybe 300 something. I don't really know. 400 something. Um, 300 points maybe, something like that. I don't really know the exact P&L. I mean, I have a rough idea in my head, but comparing yourself to me is only going to bring you down. Like, only a couple people know how much I make on average day, but that it really doesn't benefit you knowing how much money I make a day. Uh, what I want to teach you guys is how I make it. It's not how much I make it, it's how I make it. I always say if you can make money on one contract, you can make it on 10, you can make it on 20, you can make it on 100. Obviously, there's a certain limit for liquidity issues, but you could if you learn how to short this every time it goes there on one micro, eventually you're going to be able to do it on 10 contracts, on 10 minis, right? So like it's about process. It's about knowing what to take. It's not about how much. What do you start your day like? Like, what do you do when you get up? So I wake up at 5:30 in the morning because in the market here opens at 6:30 a.m. So I open at 5. I wake up at 5:30, 5:45, 6 a.m. I shower. I usually eat something, but right now I'm fasting. Um, I brush my face, brush my teeth. I sit down. Usually wear a hoodie because it's cold in the mornings. I look at pre-market action. I draw my levels, and I just relax 20 minutes going into the market with a clear head. I don't trade the first 30 minutes, 20 minutes. So I just watch the action, digest it, and wait for my trade. Usually I'm not taking a trade until like an hour and a half in or something, or an hour in. So I'm not really in a rush to take a trade. Remember, we're not here to take trades, we're here to make money. Do you trade the European session at night? No, I do not. The European session opens at 12 in the morning for me, and I need to wake up at 6. So staying up anything past 1 just makes me trade not good the next morning. How to improve my psychology? You have a process. If you have a process, you won't need psychology. I mean, I'm not denying that psychology has a big effect in trading. Um, Especially when you have like a loser, you tend to lose a lot more. Just because you're not confident in your trades, you tend to become scared, right? Um, but the key is to just be consistent with your process. If you're consistent with your process, um, you won't be scared. You'll just be like every single like the key is to just be an algorithm. You don't want to be scared. You don't want to hesitate. When it looks good for a long or a short, you enter. You put a stop, and you know where you're gonna take profit. There's no hesitation there. There's really no bullshit around it, right? This is like having a consistent process will be the only thing to improve your psychology. Taking random trades will never improve your psychology. Like taking a random long here and taking a knife, that's just gonna make you scared longing here with a stop right here, even though it's a great trade to take. You'll just be scared because you lost money. But you lost money on a random trade. You didn't lose it. You didn't lose it longing this. You didn't lose in shorting this. You took a random trade. So my key to improving your psychology is to be consistent trader. I don't mean that by P&L. I mean that by strategy. Do you use any other than profits? How do you journal your trades? I mean, profits are one of them, but it's not the main thing. I measure drawdown. So for example, if I went long here, for example, I'd measure how much I was losing before it went my way. That's called drawdown. This is one of the key things I use because I want to see how early I'm entering before I'm right. I use win rate, percentage, how much bigger my winners are than my losers. Um, that's basically it. I don't really. I'm a really simple trader. You can see my charts are pretty clean. No bullshit, no noise. I don't need to have anything on my charts. I don't need to have any indicators. Nothing. To be consistent. Um, so how do I journal my trades? I just put the entry, the exit, the drawdown, how many contracts I was in, and the time. Oh yeah, because I like to see when I make the most money, what times a day I make the most money, and what days of the week I make the most money. I think that's it's a little bit important, but it's not that important. It's just good to know patterns, I guess. I always do you use any indicators, and do you use news? Uh, I don't use any indicators. I use a volume profile, but that's about it, and delta. But I don't really use any indicators. And do you use news? No, I do not trade news. News are random events that I do not touch. Like I said, I only take a couple trades per day, and anything after that is just it's random. I always see you only people. You guys have to improve your grammar. I I always see you only take not many trades per day. If you're this good, why not trade more and make more? That's the biggest mistake you think. You think that trading more will make you more. Yes, trading your edge will make you more. But your edge isn't present 24/7. My edge is only present one, two, three, four. Four times in a whole day. That's the whole time my edge was present. It's not like I could have long here, short here, long here, short here, long here, short here. Yes, I could have done that, and I probably knew that was gonna happen. But you don't touch it. I don't touch it. Um, you gotta understand. Less is more. With trading, less is more. Taking less trades per day, as long as you're following your edge, will make you more P&L over time than taking random trades, right? You could have, like, if you think that taking more trades will make you more money, I'm sorry to say, you're gonna learn the hard way, brother. That is a very flawed mindset. Taking more trades, like let me show you an example. Long here, lose. Long here, lose. Long here, lose. Long here, lose. Short here, lose. You just took 6, 7 trades and you lost on every single one of them. Meanwhile, I took one and I made 10 times what you could have made. So it's not about how many trades you take. It's about the trades you make. How do I come back from drawdown on a funded account? I mean, it depends on the drawdown. You just gotta That's actually a very good question. Um, you have to size down. So it's gonna take time. So coming back from drawdown, especially on a funded account where you have to pass, it's gonna take time. You have to size down. So if you're confident in the short, you can only. It depends on how much your drawdown is. It depends how much your drawdown is, but you have to go. You have to size down. You just have to build small wins over time. You can't go big size, because if you're gonna go big size, there's a chance that you'll get stopped out and you'll lose the account. How do I become disciplined like you? What do you do? I know what my strategy is, and I don't take that many trades per day. You just chart, you put your key levels, you wait, and you take it with a stop. The key is you take it with a stop. Right? And you have to have a daily loss limit. Um, After this amount losing per day, I will leave my setup. This is to ensure that you're not going to blow up and have nothing to trade with tomorrow. This is very, very, very important. Lots of people will have a fantastic month and blow it all in one day because they couldn't hold their emotions. After a certain amount of losing, you have to turn off your PC, you have to turn off your phone, you have to leave. Tomorrow will be a better day. Tomorrow will be a new day. Next week will be a new day. You can't let one day kill your whole trading. How many points do you aim for per day? Honestly, past couple months I've been a little bit better than average. Um, so I'm typically aiming for around 40 to 60 points. With my size, I'm very happy with that. Honestly, I can't really ask for more. Some days I make more, some days I make less. But ideally you want to aim for at least 20 points a day. You could even go for 10. Like 10 should be extremely possible. If you're not focusing on the money and you're focusing on process, if you're focusing on strategy, 10 should be extremely possible every single day of the week. I literally mean it. Every single day of the week, you could be making 10 points. Do you ever swing? Very rarely. Very rarely. I don't swing that much. Just because you don't really know what's going to happen overnight. Local highs and lows, when you would trust them versus when you don't. That's a great question. I think that's an ICT concept, so I don't really know what you mean by local highs and local lows, but I know what you mean because you explained it to me. So I guess this would be a local high or an equal high. I don't really know. So you never can really trust anything, but you just take it with a stop. So for example, we know this is an area, it popped above, but very weak follow through, and it drops right back down, and it doesn't fully drop back down to somewhere around here. It drops back down to the same range. It pops a little bit higher, but it's still, we see weakness. So you can take a short somewhere here. You can even take a short under the 75 as if you're shorting it when it popped here. And you have a stop right above the 85. So you're risking 8 points for it to go back to the bottom of range back at 52. So you're risking 8 points to make 20, right? That's almost 3 to 1. That's kind of, I mean, I hope you get what I mean. Another short would have probably been somewhere around this area, something like this. Just when you see that it's rejecting a lot in the past, especially when it's coming from a downtrend. So when it's coming from a downtrend, like when it's trending down, and it pops, this is called a lower high. So lower high, lower high, lower high. If you're comparing it, if you're comparing it from this right here, so especially even after reject, but this is the last couple minutes, so you could try shorting right here, or you could try a long anywhere in this area, anywhere under 260, between 250 and 260, and you just have a stop under. You want to see slowing down. You want to see lots of wicks if you're watching the chart. That indicates slowing down, whatever direction it is, if it's up or down. But yeah, you just want to see slowing down of momentum, basically. Let me show you another example. This is another local high that would have been great. So we know it popped. We know we have a key level at 600, and we know it's slowing down. So we're seeing a lot of wicks, right? We're seeing wicks. One great candle, fat rejection, no follow through, strong wick, and we know that's a key level from earlier in the week. My chart doesn't go that far back. All right, so we know that's a key level from earlier in the week, and it looks like it might reject. You take it with like a 20-point stop, 10-point stop, whatever it is, maybe a little bit above the early highs, and your first target is probably somewhere around this retest. First target could be 20 points, right? And then you hold some runners, and I don't think anyone would have caught this whole move down because that was a crazy move down, but like the trade would have been successful regardless. Like, you get my point. So it's not necessarily that you could always trust something. You just take what looks decent with a stop. What looks good with a stop. It's all numbers game. It's all probability. There's nothing really certain. You just take it. The probability of it not working out is 10 points. You're making 20. If your win rate is at least 50%, it could be a lot lower. It's like 44 or something. If your win rate is at least 50%, you'll be profitable. You'll be very profitable, actually. I think that's about it for the video, but just the key is with trading is to not take that many trades a day, and to wait for your edge, to wait for your strategy, to not take random trades. That's the biggest key I could literally give someone, is to just be disciplined. When you're up on the day, leave, come back tomorrow. When you're down on the day a certain amount, leave, come back tomorrow. When you see a trade that you like, take it with a stop loss. If you see a trade you don't like and you think it's gonna go a certain way, you don't take it. You leave it until it goes to an area that is a part of your strategy, and you take it. And you do that so you can refine your strategy later and become better. It's manage your size, manage your stop loss. Don't take that many trades per day. Less is more. And that's it for the video. I hope you guys learned something. How I chart, how I trade. And if you guys have any questions, always feel free to DM me or leave a comment or something, and I'll respond when I can. Have a great day.